Good morning and welcome. Patriot Radio News Hour. Joe and Jason here on this Wednesday. And I can tell you right now, I could get used to this 4-day-a-week thing, right? Yeah, it's confusing, right? It's only my second time here. It should be Tuesday. No, it's Wednesday, obviously. Monday was the holiday, but the year of chaos continues, and that's exactly what we saw in the bond markets. Yesterday we nailed it. Told you exactly what was going on in the U.S. Treasury markets. Disaster striking the multiple auctions yesterday, the 2-year note, the 5-year note. These are the good ones. Those are the easier ones to sell. Everybody on edge as the 7-year auction is going today, and it's just volume, the amount of debt needing to be sold. It has created, yesterday we talked about now the Treasury. Hey, we're going to provide liquidity, right? They're already doing Operation Twist. They just don't want to tell you that. Now they're doing quantitative easing. This is the Treasury, right? The Federal Reserve, right? They're trying to end quantitative tightening, and they couldn't do it fast enough, right? This is, again, when they tried to cover things up. Right, it's always the little things that kind of leak out the sides, and that is what is happening. The Dow is down big today. It was down yesterday. Silver above $32. Gold's down like, $10. It should be down $110. The 10-year note has absolutely lost its mind. 7,474. So think about this. The high level watermark of the year was 7,475. Yesterday, before the auctions, the 10-year note was at 448. These kind of moves are unprecedented. The 10-year note shouldn't be moving like this in such a small period of time, but it just reflects the growing problem. On the other side of the break, we'll break down yesterday's auctions. And really, Jason, it's pretty simple. It's lack of demand for a price that were the Wall Street paper markets would like people to pay to allow the United States to borrow from them, but it's just not happening. Yeah,
I think people are a greater amount of people are starting to lose faith in the paper markets, Joe. For a long time, people trusted their 401k or they trusted their pensions or whatever it is they were guided to be into, and more people are looking. This is what inflation does. Inflation, and the Fed knows this, it starts to wake people up, doesn't it, Joe? And they start looking around and they're like, wait a minute, right? And now the paper markets can't just dominate the price of commodities like they have been in the past. It's, I don't know if the paper markets will lose, what they have, the pricing over these markets fully. But it sure seems like, Joe, we're in a moment where people are really questioning what those paper prices on these commodities are saying, because, it's almost everything, right? I was looking at uranium. Uranium is like getting ready to explode because, the world's changing geopolitically, right?
Yeah, and we'll talk about wheat. We'll talk about beef today. It's just, again, things that are real. That is where the money is going, shying away from these paper assets. Our toll-free number, 800-951-0592. The website at allamericangold.com. And even though it's a short week, right, there's a lot of, GDP data is coming out. The Beige Book's going to come out. We're going to get a look at the, what they say, the Fed's favorite inflation gauge. That's going to be on Friday. But the problem is, it just seems like, as we talked about before, remember, Jason, I kept saying, wait for June, wait for June. And, of course, it didn't even get to June, did it? We told you in January, wait for March, right? And then what happened in March, right? Here's the explosion in the upward price of gold and silver. And, Jason, just like we thought, the amount of debt, the size of these auctions is getting to the point where it is reaching levels that cannot be supported. And are we going to see? Remember, Jamie Dimon kind of warned about this stuff, saying, hey, people may be shocked at how high interest rates may actually go, and it's really going to depend. I'll say this. We better hope that the U.S. economy doesn't buckle, because if the U.S. economy buckles, there's going to be big problems because we know what the solution will be, right? Well, we're gonna spend more money. We're going to throw more money at it. And can all of this debt be gobbled up? In the Treasury in their announcement yesterday, why am I not surprised? We're going to do $2 billion a week. That'll stabilize the market. One day in, and the market literally chewed it up and spit it out, Jason. The fire hose isn't big enough.
No, it's not, Joe. Well, there's the break, but yeah, I agree, Joe. Agree. This is exactly what we're looking at.
When we get back, what happened yesterday in those auctions? I'm going to tell you all about it. Patriot Radio News Hour. Stay with us. 800-951-0592. The Dow's down almost 400 points right now, 38,400. So are we going to go farther down here? The S&P's down 34. The Nasdaq's down 80 again. All about NVIDIA there, and the Nasdaq kind of helping that not be down as much as we talked about. The 10-year note, 474. The Japanese yen skyrocketing today. This is a move that unprecedented, quite honestly. 2.2. I'm going to check. I got to check because that just seems like that would be a massive misprint. The Japanese yen, the 10-year note doubling in less than 24 hours. Here I'm talking about, the U.S., we moved up about 25 basis points, and I was like, hey, gosh, that's nuts. The Japanese yen more than doubling. If that number's right, I will check during the break and let you know. But if it is, wow, there's bigger problems than we expected out here. Like I said, gold hanging tough today. This should be this should be like a $50, $100 down day. It's just not. You know why? Because they know. This is really a strong performance on gold right now. 23.45. Silver above $32 right now. The Japanese yen, as we're talking about currencies now, approaching 158. And so we'll watch what's happening there. But we keep telling you, you have to be more diversified. Come on, wake up. So many new people. I'll say this, too. All you new people out there, if you want to set an appointment, come in and sit down and talk with us, we'll gladly do that for you. If you're in Colorado, you can go see Jason in Fort Lupton. If you're here in Phoenix, we're at the Deer Valley Air Park, we'll lay it out for you. We'll show you the coins. We'll give you the whole history of the world if you need it. But the easiest thing to do is when we put the specials on, you just call up and say, I want the special. It's just that simple. Get your gold and silver put away. Be more diversified. If you didn't buy any gold and silver during the dot-com crash, you didn't buy it during the financial crisis, do yourself a favor and buy it today. Get it started. If you're like, hey, I've done that, Joe. I bought some in the .com, and then I bought some more in the financial crisis, and I'm buying more now. Hey, check out our friends at Y Refi. Right? You can get up to 10.25 fixed rate of return. If you got a lot of money in an IRA, take some of it and turn it in. You can turn it into income if you want. You can do whatever you want with it. You got to have at least $50,000. But the best part, it's not correlated to Wall Street. I mean, what we're going to talk about today in the bond market of the United States, it's almost unprecedented. It really is. This is what we're finding out. We never knew how much debt was going to be too much. Right? Think about the crazy things that they've done. The national debt was like $5 trillion when the dot-com bubble burst, right? Now we're talking 40 plus. You need to get yourself protected from these paper markets. You know it's coming. You know it's coming. Every time you fill up your car with gas, every time you go to the store, every time your insurance company sends you a letter telling you your rates have gone up, or they're not even going to cover you anymore, right? All of these things, it's out there every single day. Check out Y Refi, invest, yrefi.com. That's the word invest, the letter Y, REFY.com. Or just make it easy. Just call them. They'll tell you all about it. 888-Y-REFI-24. So, having said that, what happened yesterday? Well, we had a 2-year auction. By the way, this was a 2-auction day, right? Obviously, Monday was the holiday. The 2-year note, this is one of the easy notes to sell. Because 2 years, in the scheme of things, 2 years not very long. Right? And these guys, they're locking in for a little under 5%. Right? And I'm talking about, Y Refi giving you 10 and a quarter, right? Hey, that's a pretty good deal. But it was $69 billion. The stop through almost 492. It had a tail of over a whole point, which is really weird because 2-year notes very rarely carry a tail at all. But this was the third tail in the last 4 2-year auctions. So that's not good. Remember, tails are bad. But what about how many people submitted a bid? It was one of the worst bid to covers in years. 2.41. It's been averaging 266, well below what was expected for an auction, like I said, an easy one. These are layups. It got worse. The internals were extremely ugly. Indirects. This is where you want, by the way, when we talk about indirects, we talk about directs, and then we talk about dealers, right? Those are the 3 categories they put them in. Just know this. You want the majority of it bought by the indirects. Okay? That signifies strength. That signifies health. They took down less than 58% of the auction. They normally, now going back years ago, they used to take down 3/4, 4/5, 75, 80%. It's been about 67%. They've been taking about 2/3. Jason, it almost fell to half. Almost fell to half. The directs had to take over 25% of the auction, which was the most in years. And then, of course, the dealers, these banks, they were left holding almost 20% of the auction. One of the ugliest 2-year auctions that we've seen in a long time, because it was ugly across the board. It had a tail. There wasn't a lot of buyers. And then all of a sudden, the banks and the others had to come in and save the day. Well, after the 2-year auction, they had to auction off $70 billion in 5-year paper. So, Jason, just think about this. One day, our government's got to refinance $140 billion. And as we said, starting next week, the numbers get worse, right? There's going to be even more debt coming up. This one, another tail, which, again, a really pretty long tail here, 1.3 basis points on the 5-year. The bid to cover, it was even worse, 2.39, 2.3, the lowest bid to cover in years. So think about the 2-year note was 2.4. The 5-year note, 2.3, right? You're starting to get the idea here. Indirect, same problem, taking down less than normal, but the biggest thing was the dealers, the banks, forced to take 20% of the auction. It was the second bad auction in a row on this day. And like I said, today, it's going to be the 7-year note. This is what's got the markets on edge, Jason, and this is why we saw a 10-year note go from 4.48 to essentially 4.74, 4.75 in less than 24 hours.
And you think this? How much higher do you think this will go? Because isn't it like 5% is when people start to freak out in the markets?
Well, 4.75 is going to be a key level. If we don't hold that level, right, then the computers are probably going to take it to 5%. We'll see what happens. But right now, it was an ugly day for the United States. I've now checked 2 different sources here on the Japanese yen, and it does, at least both are reporting the same thing. CNBC and Market Watch. Okay, no. All right, so Market Watch is saying that, yes, the Japanese 10-year note is up, but they've got 1.08. So, man, that's a lot better. I couldn't imagine that it doubles. Let's assume that number is the right number and versus it doubling to over 2%. That would be unprecedented. I think the Dow would probably be down 5,000 points if that was the case. So, but either way, yields rising across the board as they're saying there's not enough people placing bids at these auctions. And now all of a sudden, the banks are being stuck with it. The directs are being stuck with it. That now, was it some bank in Arkansas now, OZK Bank in Arkansas, getting hit with a double downgrade. I know they've got a lot to do in the commercial real estate space. Jason, this is going to cause a lot of heartache out there in the paper markets, especially when it comes to banks that may be teetering on the edge here. Remember when they were all excited? They thought they were going to get that super low inflation number, and the 10-year note hit 4.3 like a couple weeks ago, remember? And then, bam, now it's all the way back. And remember, let's not forget the other big part of that Treasury announcement came out late Friday after the markets closed, that they're going to start essentially quantitative easing in the Treasury market, even though the Fed is still going to be selling $25 billion worth, right? You're kind of like, what kind of backward crap is that? But starting in August, hey, guys, we're going to be out of money again. We got to increase the size of the Treasury auctions, which means already demand is waning. And the Treasury, listen, it's going to increase in August, and I promise you it's going to increase again in December, Jason. It seems like this is now a yearly event when it comes to the Treasury market.
Well, then the Treasury is also buying their own treasuries back up. So I think that's where your quantitative easing is coming from. They're doing the quantitative easing right now, and we don't know what the Fed's doing because they could do stuff without telling us. But what they're showing is that they're still tightening, right, Joe? Even though it's a lower number, they're still selling off. It's interesting how the Fed really wants to get that balance sheet down, right, Joe? Is it so they can buy more and it doesn't look so bad, or is it? Or are they looking at something else and they want to get out? It is a private entity. Yeah, they may not want $7 trillion worth of stuff that might be worthless, right?
Well, I'll just say this, that it's not been a good 2 days here. We'll see how this auction goes today. Rates are significantly higher, so I'm hoping it goes okay, right? I mean, if rates were, 4.55, 4.6, maybe we'd. If it doesn't go okay, then we really are going to need to be concerned here. But we'll have to wait. Unfortunately, by the time we get the information, we'll be off the air. But we can talk about it on tomorrow's show. Also, over the Memorial holiday. Food inflation, apparently it's getting worse again. Wheat exploding higher. We'll talk about that when we get back. 800-951-0592, Patriot Radio News Hour. Joe and Jason here on this Wednesday. We dubbed this the year of chaos. And it sure looks that way. Chaos in the bond market. That's the biggest bubble. When we look at this boom and bust cycle, there's nothing bigger than that Treasury market, and it's not a good sign. And this is why I think that it's going to be a very big struggle when this bubble pops. Because listen, hey, 01, yeah, the dot-com bubble, it popped, but hey, we came back. Well, then the financial crisis, it popped, and then we came back. And look at, we're at, well, not now, but we were at 40,000. But as we laid out, what did it take to come back? Right? $5 trillion at the dot-com bubble, $8 trillion at the financial crisis. Right now we're at $42 trillion, and really, come on, let's not lie now. Now the Treasury, who knows? We don't even really know exactly. We know what the Fed's telling us, but we don't know if that's what they're actually doing or not. But let's just take it at face value. Okay, 8 to 42. That's what happened. To get to Dow 40,000. Was it worth it? How are we going to have this great recovery if we're already choking at 42? And remember, the number that they report, we're at 35 trillion pretty much right now. Going to end the year at 37. By the end of next summer, some people are saying the debt's going to be over 40 trillion. Plus, we got the Fed's balance sheet, now the Treasury's balance sheet, right? It's very hard for me to see a bounce back of any sort for a very long time. Because the amount of debt, it's just overwhelming. And they're going to have to take it from somewhere. Right? And that's where gold and silver comes in. You don't want the government taking your money. And how are they going to take it? Well, crush your 401ks, crush your IRAs, right? Digital currency on your bank accounts and all this other stuff that we know they're going to have to do. Look at what Janet Yellen said. Oh, hey, listen, we're talking taxes now. We got to raise that revenue. Well, she's right. And it ain't by a little bit. And this is why you're seeing all the central banks flocking into gold. They're getting out of dollars. They're getting out of the debt markets. And it's not just dollars, yen. Who the hell wants the yen? Honestly, who? Nobody in their right mind would want to buy that currency. They may want to trade it. They don't want to own it. But they want you to own gold. I want you to own gold. You know you need to own gold. We're going to make it easy today. We never know what's going to happen day to day, what pops in our door day to day. I got a huge special. We've been running $20 gold the last few days at $25.50, right? Saints, Liberties. Today and today only, 25. 25. Liberties or Saints, you call it, you pick it, whatever you want. 800-951-0. What? 800-951-0592. Patriot Radio News Hour. Just like that, Joe. That's the number. Come on, man. I know it's only been the number for 27 years. But get it put away. Do not wait. Why do you think everybody, this is an easy call. Silver, I'm going to say this right now. Silver $0.50, $260 a roll. Silver is going to make a big move. I'm loving the chart set up here. The fact that they tested 30, now it's right back. Right to $32. That is a huge move. And again, silver should be down like $1 or $2 today with what's going on in the bond market. Instead, it's actually up a few cents. Jason, this is really interesting. I will say this. We've talked about bond market. We've talked about the problems. But, boy, have things changed over that Memorial Day holiday. Isn't it interesting, though, that Janet Yellen dropped that news Friday afternoon, right, while she was overseas and hoping that nobody would notice it come Tuesday?
You got to time those announcements to the, if you don't want people really to hear it, you just put it in a place where nobody's listening. Everyone's rushing on a Friday to get to their weekend, right, Joe? And that's when you slide in that little bit of news that maybe they don't want you to investigate and learn and understand. And we got a few more of those coming, I think, in the coming year, Joe, because there's a lot of bad news that they're going to try to, whitewash or change or belittle. And it seems like every step is another bad step in the direction of, inflation and market chaos, which will be more and more good news for gold and silver prices. I mean, look at it's a commodities rally. You've covered several things of commodities that are just racing, Joe, and that's inflation. And you talked about all these things, that are driving the markets, and making the standard of living hard for people. It's the inflation. How are they going to fix this? They're going to inflate their way out of it. Every year that there's any inflation, it's theft, and it's on our backs. And now we just have this higher level of theft going on, and it could be stopped if people understood how to do it. But there's very few people that listen to shows like this and understand gold and silver and why inflation is just not necessary.
And the best part is if you have it put away, when everything else crashes, right, that's when you turn around and you sell some gold and you buy things really cheap, right? You get maybe, if the Dow goes back to 20,000, maybe you do I'm gonna lighten my gold a little bit, go back into the paper markets, right? But the problem is if you don't get yourself hedged, you don't get yourself protected, they're going to wipe you out. Just going to tell you, you're going to get wiped out, whether it's through inflation or whether it's through the fact, hey, I'm okay. I make enough money that I can weather the inflation. The problem is they'll wipe you out in the paper markets. That's the other side of it. 800-951-0592. We're going to talk wheat and beef. What happened over the Memorial weekend? I'll tell you that when we get back. 800-951-0592 for all you newbies out there. Today's the day. You know, every day we talk about, last week it was those maple leafs, those silver maple leafs. That was the special divide. Today, this is it. $20 gold pieces. These are 1 ounce gold pieces, all pre-1933. Why do we like pre-1933? Simple. Only one reason. That's the most private way to buy gold, period. You can buy it, sell it, trade it in any amount. You don't have to provide your Social Security numbers. You don't have to get worried about 1099. And you don't have to worry about all that stuff. That's why we like it. It's just that simple. Right? Plus the fact the government now says that all the pre-33 that didn't get melted down is a collectible. Why is that better than bullion? I don't know. If you look at the Confiscation Act of 1933, guess what? The only gold you could legally still own. Coins that were collectible coins. That's it. Everything else had to be turned in. Are they going to confiscate gold again? I don't know. But hey, will they do the same thing again? We don't know that either. But I'm just saying the way the laws are written today, this is why we do it. And at $2,525, this is where you want to be. You don't get very often to be able to buy gold this close to spot. And then on the silver side of things, it's no contest. I mean, right now, Silver Eagles, everywhere you go, they want $42, $43. Right? We've got the half dollars at $36 and a little and change at $260 a roll. It's $6, $7 less an ounce. Buy it that way. Rolls of silver half dollars, $260. Liberties or Saints, you pick them. You want to mix them up. We don't care. $2,525. Wheat has exploded, hitting a 9-month high and essentially going right back to where it was. They're saying that the U.S. government wheat forecasted to have the smallest global stockpiles in over a decade, saying that the projections continue to get worse. The commodities market's telling Bloomberg the rally, the growers have all the power. They're wielding it mercifully. They're saying that essentially what little stockpile is out there, the farmers aren't selling it, Jason. They're like, no, I need more than that. The price still isn't good enough for me to sell my wheat, and they're just going to hang on to it till they get what they want.
Farmers are not stupid people, Joe. they understand how things work, and for as beleaguered as they are in the system that they're operating underneath, whatever power they have, they'll use. And if you have a way of storing, your corn or your wheat or any of these crops, and you're not going to get the price you want. These farmers are seeing it. They see the inflation. They see a commodities rally, and they know that, hey, I'll just sell it as need be. But if I don't get my price, that's what's good about grains, right, Joe? They are storable. Maybe not as storable as gold and silver long term, but boy, you can store some of this over quite a long time.
And here's the problem. It's the lack of inventory again, right? It's the lack of inventory again. So wheat is a huge product out there in the food industry. That's not a good sign. Going to beef. All fresh beef retail values hit a new all-time record high in the month of April. Beef prices across the board continuing to rise. Prices that are at an all-time high, and it's getting to the point where consumers are saying they can't afford it anymore. And what the ranchers are saying is, hey, guys, There's nothing we can do here. We're selling all of the cattle. The cattle herds now the lowest going back to the 60s. And they're saying, according to the cattle ranchers, Jason, they see no let up in the price of beef. And they're saying that it's going to be this way for years and years because they're just not able to grow their herds. And for most ranchers, the only way for survival is to continue to sell more of their herds so the herds keep shrinking. And you know what? I don't know. But they talk about government regulation here. They want to now electronically track all the cows. The ranchers saying the government is essentially trying to put them out of business. Are they just going to make beef cost so much that people just stop eating it because it's bad for the environment? Sure looks that way, doesn't it?
It's economics, and it's only economics, Joe. And when the Berlin Wall fell and Russia so-called lost the Cold War, they're not just beef, their pigs, all of their animal supplies went way down. In fact, it went way down, and it stayed down for decades. They didn't rebuild their cattle herds for, I think, 3 decades into the 2010s. That's what inflation did. I mean, Joe, you probably remember back in the 1990s, you were talking about I think they talked about a ham. This is back in the 1990s, a ham being $145, right, or something like that. I mean, it was out of control inflation, and it unfortunately all animals are. There's a lot of commodity intensified price that goes into it. It's not just the animal walking around. It's the feed. It's the care. It's not like a crop. Wheat is wheat. There's not a whole lot of antibiotics, hormones, and all this other stuff, right? So I would suspect as long as the inflation stays high, Joe, the cattle herds will shrink or stay smaller.
800-951-0592. Patriot Radio News Hour, Joe and Jason, wrapping up a Wednesday. 800-951-0592. Wrapping up this Wednesday. Again, $20 gold pieces. You get to pick them. Saints, Liberties, whatever you'd like. $2,525. You got spot here, $23.42, $23.43. Spot silver, $32.10 now, $32.10. Rolls of silver, $half at $260 a roll at 800-951-0592. I'll just say this. I'll be shocked if we don't see $35, $36, $37 silver in the next 30 days. How's that? I love how the chart is setting up right now in Shanghai. Spot silver there, $35.51. So you got this $3.50 difference in spot silver between London and New York and Shanghai. And Jason, that gap's going to get filled, right? That gap is going to get filled. And when we look at inventory levels, it looks like it's going to get filled to the high side.
I'm not sure that gap's going to get filled. I think when the price goes up here, the price goes up there. I think the East sees the price of silver and gold as a bargain basement value. And if we get silver spot at 35, it'll be 38 there. If we get silver spot at 40 here, it'll be 43 there. They're encouraging this buying in the West and selling it to the East on a massive scale, Joe. So, yeah, I think it'll get filled. But when will that point be? When will that appetite to move Western gold and silver to the East, when will that stop? And I don't imagine it's going to happen very soon while you got central banks buying it at record levels, Joe.
Yeah, and it's something where, I'm starting to question whether or not the Fed has entered into another transitory nonsensical stage here when it comes to inflation. And then, Jamie Dimon in his annual letter, he brought up a really good point. In the mid-1990s, there were 8,000 public companies listed in the United States. Do you know that we have less than 4,000 now? Isn't that crazy? Right? We should have more companies listed than ever. The hands of the powerful have shrunken so dramatically that for most companies, Jason, it's not even worth going public. The cost and what you have to do it, the inflation of it. Now these companies just buying each other out. It's kind of like the banks, right? We used to have 16,000 banks. Now we got 4,000 banks, and everybody out there thinking, well, gosh, why should we have 4,000 banks when we can, 40 or 50 banks would suffice?
Well, and add to that the fact that to have a number of traded companies, you have to have companies that want, like you said, want to be traded. Not just the expense of becoming a publicly traded company, Joe, but you start a business and Walmart comes in, will buy you. Or, Apple comes in, will buy you. So there's probably record levels of startup companies that are being bought up and absorbed. And who can blame the average entrepreneur for coming up with a business model and selling it and making his money, right?
800-951-0592. Jason and I were coming right back with the half-empty cup. Stay with us.